If you're a high wage earner, somebody making $500,000, millions of dollars every year, biggest bang for your buck when it comes to financial planning is tax planning. You make a lot of money, don't leave the IRS a tip. Keep more money in your pockets. My name is Michael Carlson. I'm a certified financial planner with Carlson Wealth Advisors. If you want to find out more about me and about my firm, you can find info by clicking the link below this video. And today, I want to speak to you high wage earners, okay? Or maybe somebody who's planning on becoming one of those high wage earners. The biggest return on investment that you can have when it comes to financial planning is going to be your tax planning. How does that all look? Tax planning is going to include things like your retirement plans, not just 401ks, but maybe also deferred compensation plans. It might include real estate. It's going to include income timing. It's going to include maybe Roth conversions at some point, choosing where to put your money, choosing when to take income, choosing when to pay taxes. You have a lot of control over the money that you bring in and the taxes that you pay. But here is probably the most important piece of advice I can give you on this.
Don't waste your time with this stuff.
What do I mean by that? I mean, your time is best spent going out and making more money and paying someone else to do all this planning for you. Hiring yourself the right team of financial advisor, of CPA, of estate planning attorney, that investment, and you should see it as an investment, is going to be worth multiples of whatever you're paying them in terms of fees and costs. With that out of the way, let me give you one warning on all of this tax planning stuff. It can be very tempting to fudge the numbers, but don't do it. What do I mean by that? Paying yourself too low of a salary, deducting real estate losses against your personal income where you can't do that, writing off personal expenses as business expenses. As a high wage earner, you are at the highest risk of being audited. And it might not happen this year. It might not happen next year or the next year. But at some point, it's likely going to happen. You don't want to have to worry about that audit coming every year. You make too much money. Don't worry about that stuff. Make sure you get the right team around you. Don't be tempted to fudge the numbers. Move forward, enjoy your life. What are some things that you can do along with the help of these professionals to save you taxes over time? First thing, and probably the biggest thing, is just timing your taxes in life. What do I mean by that? How do you accomplish something like that? Some of the big obvious things that you're probably really familiar with and probably doing already is deferring your taxes through things like a 401k plan or other type of retirement plan, deferred compensation plan. These are great ways to take dollars that you're earning today, defer the taxes onto them at some point in the future. It gives you a lot of control. And using the right combination of those tools for however your business is set up can really provide a great way to save on taxes. Above and beyond that, the next piece of that is choosing, okay, when do I pay those taxes in the future? You can control that. Sure, you can wait until you're 73 years old or 75 years old, whatever the time ends up being in the future that you have to start taking required minimum distributions on your retirement assets. Alternatively, a much better plan is to find those years where you are in a lower tax bracket and doing things like Roth conversions at that point. That can be early on in retirement when you're maybe not even taking Social Security yet, you don't have a business anymore, you're not earning money anymore, and you've gone from a 30-some% tax bracket down to a 10% tax bracket. Well, let's fill those lower tax brackets up, because once you have to start taking those required distributions in the future, you're probably going to jump back up because you're going to have so much money in deferred retirement accounts. Early in retirement, before you're taking RMDs, before you're taking Social Security, and even after you start taking Social Security, there's plenty you can do there. What about years in which maybe it's just not a great year for business, and so your income is greatly reduced. Might not seem like it at the time, but a good opportunity for some tax planning. What about the year after you sell a business? Maybe you're an entrepreneur and you go through these periods of time where you'll start up a business, grow that to a certain point, cash out, and then you might have a few years where you're not earning as much money while you get that next project going. These can all be great times to take those dollars that you've set aside, you deferred the taxes on, and do some Roth conversions. Pay the taxes now in anticipation of in the future probably being back in a higher tax bracket again. On top of those things, an alternative altogether is maybe deferring taxes isn't really in the game plan for you in general. Why might that be? I know a lot of entrepreneurs, and a lot of them don't ever want to slow down. They don't want to stop creating and growing business and things like that. That's what they love to do. So you might be a person who's never going to be in a lower tax bracket. In that case, you might just consider doing as much on the Roth side of things as possible and just say, okay, I've paid taxes on this money. I'm never going to have to pay taxes on that money or its growth again. Get it into the Roth IRA. That might be the right plan for you. Most important thing is going to be finding that right team of professionals. Meet with them on a regular basis. Make sure they're looking out for these things. Make sure they're keeping up with changes in tax laws as laws change all the time. Changes to estate planning laws. Okay, there's a lot of things to look out for that you don't need to be worried about, but it's still good to have some education just to know about them so you can ask, hey, are we looking out for this? Are we looking out for that? Are we set up properly in terms of business entities? If you're not quite sure about the professionals you work with, go out and interview other professionals, other CPAs, other CFPs, other attorneys. If you know the one that you're using right now isn't looking out for all these things or doesn't have a focus on those things, no harm in firing them. You can still keep friendships, even if these are people that you went to college with or have been friends with for a long time, okay? Trust me, I know, I've been there. It's not fun to have that initial conversation, but it's well worth it. I've covered a lot of stuff, really high level here. If you want to dive deeper into these things, I'd love to have a chat with you. You can find my information again beneath this video here. My name is Michael Carlson with Carlson Wealth Advisors, and hope you have a great day. Thanks.